Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. Today's market tried to confuse traders, and for many, it probably succeeded. The moves looked random on the surface, but beneath that noise, the price action was quietly telling a story. In this video, we'll break down today's session step by step, decode what the market is actually hinting at, and then build a clear, structured trade plan for tomorrow. No predictions, no guesswork, just reading price the way it should be read. If you trade Nifty seriously and want a calm, repeatable process instead of emotional decisions, make sure you watch this till the end and subscribe for daily no noise market plans. In case if these daily videos are helping you, do not forget to like the video and put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to both. Now let's jump straight to the charts. Markets today opened with a gap down on regards to weak global cues. And our plan was to actually short the markets below this particular consolidation area with a pullback. Now markets opened uh, much below the consolidation area and breached the previous day's low at the start of the day itself, right? Now, this was a move which could not have been captured absolutely based on the setup that I use. Now, we could have shorted the markets below this particular low at the break of previous day's low with a pullback. But then again, another filter which I always speak about a lot in my videos is watch where the market is coming from, right? So from the day's high, if you look, the market had already traveled a long distance, right? At a lot of distance. And that was the reason why I did not take this trade. Otherwise, anybody who would have entered into the shorts at the break of the day's low, even with the filter of pullback, would have been trapped brutally on the wrong side, right? So it is always extremely necessary that where is the market actually coming from. Had we, after around the opening, had we got some pullback around here and then we would have continued, that would have been a high or a good probable trade setup. But the way it had moved around here, it was not a favorable setup, right? And then again, if we would have got this particular price action around these levels, which were pre-marked on the charts, we could have created some long entries. But then again, out here, because it happened above our support levels and not exactly sure how the market would be unfolding, I did not take entry into any longs either. Today was an absolute no trading day for me. I was as it is trying to get back to trading after a week-long break. And that was, as I also told in the last video, that I will be personally taking it very, very slow. And nothing as per also formed based on the setup that I used out here. Below the day's high, again, it formed a good double top kind of a setup immediately trapping anybody who would have shorted the markets around here. Kindly try to understand out here if you were willing to looking to short the markets. This was a major important swing, and we needed to wait for the markets to take this swing out instead of trading on a double top breakdown out here, right? And anybody would have again shorted the markets out here would have been trapped on the wrong side. Post this again, extremely, extremely volatile. Apart from this slight price action out here, which was below the previous day's low, today was an entirely inside day inside the um, price action of Friday, right? Apart from this small section, which invited sellers and then trapped them immediately. So, yes, this was it about today. And for tomorrow, we'll start with the daily time frame analysis. So again, a good positive day in terms of price action. If you speak about what is the net takeaway from today's market, yes, it was a positive price action. We opened with a gap down, but then immediately also recovered. Not immediately, but then as we throughout the day, we slowly and steadily recovered and we have closed near the highs, right? This makes tomorrow's trading plan much more easier for us. All right. So for the sake of convenience and confirmation, we'll still keep Friday's high as the point of interest for taking any long entries. So above this, with the pullback, we can initiate a long trade. Since the high has not been breached, if we also look at the 75 minutes time frame, so the high is still not breached, although we did come down and we have gone up. But then again, because the high has not been breached, we will still be keeping this fib level on the charts. Any positive price action around these levels can be used to take a long entry. Do we also have any? Again, if we are not supposed to go up higher, we are being prepared for every scenario. In case if we are not moving higher up below this particular trend line, below this particular swing, again, we can look for a trade on the short side. Yeah, this is the simple trade plan that I will be keeping for tomorrow. And anybody who is trading tomorrow's expiry, tomorrow is the weekly expiry of Nifty. So anybody who is into option buying and into scalping options just like me, make sure to shift your trading to the next week's expiry, apart from the hero zero setup that might happen based on the change in open interest data. Uh, that to post 2 p.m. All other trades should be taken in the next week's or the following week expiry. Do not trade in tomorrow's expiry. You might be paying a slightly higher premium for your options, but then you will be doing your capital a much needed favor by simply shifting your trades to the next week's expiry, right? Post 2 p.m. based on the OI or change in OI. If we get a hero zero expiry based setup that we have, we will be taking those trades in tomorrow's expiry. Apart from that, all other trades to be taken in the following week's expiry, right? So yes, that's it. This is a simple plan. Again, we might again be uh, consolidating around here as well. So be sure to not get trapped in case of a sideways or a lack of a clear market structure environment, right? So yes, that wraps up the analysis for tomorrow. Markets don't reward excitement, they reward preparation and patience. Today we focused on reading price, not chasing moves. If you stay disciplined and let the market come to you, consistency becomes inevitable. Stick to the plan, respect your risk, and remember the market always pays those who wait. I will see you in the next one. Till then, trade smart, trade safe. This is your Nifty Guy signing off for today. Cheers and thanks for tuning in, guys.